Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A second bearish black crow yesterday and a follow-on lower from the previous session's shooting star pattern, type 1 bearish. Prices once again used the April 2020 low at 107.25 as a base, this time to push lower, though pulling back up from testing the next supports below the slowly descending short medium moving average, currently 106.43, as well as the 2020 low at 106.36 and congestion at 106.13. Meanwhile, above we have the upper bull channel line, currently at 107.71, which is highlighted in green, of the recent October-based bull channel. Plus, beyond that, we have some pretty heavy-duty combined resistance, with a medium moving average currently 107.96 and a long moving average currently at 108.02. Right now, still doing a dance as to whether to form a dead cross or not. Overall, we are still within the previously mentioned October-based bull channel, currently 105.65 to 107.71, which in turn is a breakout from the early mid-July, late October bear channel that is highlighted in bright red on my daily chart. Now, as a result of this breakout, I had previously laid out some potential topside targets for such a bear channel pattern. Thus, you had a primary target in the 107.10 area with a secondary target X1 in the 108.05 area. Last Friday, we saw the primary target at 107.10 reached and exceeded. The secondary target X1 is still live at 108.05. But as I said earlier, there is a lot of resistance nearby from the medium and long moving averages. So far today, a move lower towards the short medium moving average and looking like at least an opening black Mariposa right now. Cable, aka sterling against the US dollar. A second bearish black crow yesterday and a follow-on lower to the previous session's bearish harami and possible shooting star pattern, type 1 bearish. This was also a continuation from the previous session's test up to the overhead flatlining long moving average, currently 124.36, and the rejection of it. Prices dropped back below the interesting support of the combined declining short medium moving average, currently 123.09, and the 50% Fibonacci line of the June 2021 to September 22 move at 123.16. Now, this raises all sorts of questions now, as this support, that is now resistance, is the top end of the recent trading range we'd seen here since mid-September, between the 50% Fibonacci line overhead and the May 2020 low at 120.73. Thus, if we are to settle back within this range and to then regard the breakup higher late last week and on Monday this week as a false break, well then, the whole idea of a late September, early November possible double bottom pattern, Adam and Eve type, is false and may be retired. This will include the primary target X for such a pattern in the 124.85 area and the secondary harder to reach target X2 in the 125.60 area. This is now an important question for this market. Now, so far today, a continuing move lower, testing the June 2020 low at 122.48 below as the next interim support. And as we continue the question whether we have seen a false break higher or not. Euro sterling. A second bullish white soldier yesterday and a follow-on higher to the previous session's immediate countering bullish thrusting pattern. The market opened over the lower time, currently 86.81, highlighted in bright red on my daily chart of the late August to early October bullish Andrews pitchfork, thus verifying the actions of last Friday and Monday as a breach but not a break of the bullish shift pitchfork, and that's been repaired. The market punched up through the slowly declining long moving average, currently 86.86, and moved over the lesser Fibonacci line at 86.98, but ended up closing right on it. Further down, below the lower time, we have the April 2020 low at 86.69, and then the significant support of the rising short-medium moving average, currently 86.45. Meanwhile, overhead, well, the lesser Fibonacci line at 86.98 is the gateway to a late October, early November based congestion between 86.98 up to the April 2021 high at 87.19. This April 2021 high is important, as though it was breached repeatedly. There was only ever one close over it, so watch it on that basis especially. The actions so far this week have offset to a large extent last week's weekly key reversal down. I'm still wondering if my recent decision to retire the potential topside targets for the recently proposed bullish half hesitation in the 87.95 area and the overall bigger June to September roof pattern with a hard to reach secondary target up in the 88.18 area, whether their retirement was a little premature. So far today, a small move higher over the lesser Fibonacci line at 86.98 and into the congestion area between there and the April 2021 high. US dollar against the Indian rupee. A second bullish white soldier yesterday and a follow-on to the previous session's immediate countering bullish engulfing pattern. It was also the first close this week, really close over, the overhead extension to the downtrend of the late July to late October ascending triangle pattern, currently at 83.21, and highlighted in dark blue on my daily chart. The market based itself somewhat surprisingly on the flatlining short moving average, currently 83.20, but was unsurprisingly capped by the familiar resistance of the October 2021 high at 83.27. Further down we have the rising support of the short medium moving average, currently 83.08, whilst overhead, well, we have tested the October 2022 high so many times without any consecutive closes over it that I would look for consecutive closes over it to actually mean something. However, we do have some highs in the 83.27 to 83.32 area overhead. Now, I previously laid out potential targets below for the recent ascending triangle pattern. Hence, the primary target X would be in the 82.45 zone with a secondary harder to reach target X1 in the 81.45 zone. I nevertheless would still once again caution you on the possibility of false breaks here in either direction, just in case. So far today, well, seemingly the same as yesterday right now, utilizing the short moving average for a test up to the October 2022 high. I continue to see that if we go much higher, we may well start looking at a weekly key reversal here. US dollar against the Brazilian real. A fifth bearish black crow yesterday, and whilst it was a lower candle, it was also an indecisive spinning top. I suspect that this was in anticipation of the approach to the combined supports below the 50% Fibonacci line of the June 2019 to May 2020 move at 484.26, plus a nearby lower purple highlighted trend line extension to the August to September rectangle pattern, currently at 483.56. Further down we have the 50% Fibonacci line of the October 2018 to May 2020 move at 477.54. Meanwhile, overhead we have the 2021 low at 489.08. But better resistance is higher up at the combination of declining broken upper time, currently 491.47, highlighted in dark blue on my daily chart, of the July to September 2022 bearish shift pitchfork, and the now flatlining medium moving average, currently 492.05. Overall, this is a further beginning after last week's weekly key reversal down, of a move down within and towards the lower end of the breached, but ultimately still valid, November 2022 to date, bear channel. That's a year now. That's currently between 469.59 to 515.16, as highlighted in bright red on my daily chart. The most recent incident involving this bear channel had been the upper bear channel line being capping the market in early October. US dollar against the Mexican peso. An immediate countering bearish dark cloud cover pattern yesterday after the previous session's reactionary bullish engulfing pattern. This seems like it might have been an attempt to reassert the bearishness we saw last week. The market was again capped by the combination of the August 2017 high at 1756.93 and a nearby rising short medium moving average, currently 1760.06. Whilst below we had support from the July 2017 low at 1743.62. Now further down we have the flatlining medium moving average, currently at 1731.84, just ahead of a combination of the broken upper bear channel line, currently at 1720.44, highlighted in dark blue on my daily chart, and the unusual neckline of the February to April 2021 head and shoulders top, currently at 1720.63. Meanwhile, above the short medium moving average, the next resistance is a slowly declining long moving average. That's currently at 1766.67. All three sixes there, just thought I'd mention it. Overall, the recent actions have been a more than suitable continuation from the break below the mid-September to date lower bull channel line, as well as below the late September to date ascending triangle. Additionally, I also repeat how recent actions have moved the July to September lopsided reverse head and shoulders pattern over to a continuation pattern instead of a bottom reversal pattern. So targets further down for the break below the ascending triangle pattern for such a pattern. We had a primary target in the 1767.05 zone and a harder to reach secondary target X1 down in the 1704.90 zone below. The primary target was reached last week. On top of this, we had a double top for the action since late September to early November. For such a pattern, there was a primary target in the 1736.45 zone and a secondary harder to reach target X4 down in the 1703.70 zone below. The primary target here was also reached last week. So far today, well, not much. A reactionary move back up, but still within yesterday's range and capped by the August 2017 low.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.